on our radar because it's the thick of results season 2. Newgen Software reported a strong third quarter performance with revenue and net profit jumping both on a year-on-year basis. US and APAC growth, however, came in slower. We do have with us Virender Jeet, who's the CEO of the company, joining in. The stock is lower, but remember, broader markets are seeing a big sell-off as well. Thanks a lot, Virender, for joining in. With the performance that you saw in this quarter, the first quarter revenue growth momentum has sustained into the third quarter, and the fourth quarter is usually the strongest for you. What are you likely to end this year with? Your first 9 months, your revenue growth has been close to around 30%, with a number close to 870 crores.
Good afternoon, and thank you for having me here. You're right, we have been having a strong growth momentum of more than around 27 to 30% for last 5 quarters continuously. As you rightly said, having said that, the last quarter generally is a larger quarter for us, and sustaining higher growth rates on those quarters are slightly more challenging than the earlier quarters of, as you rightly said, the H1. Having said that, the business right now is looking strong. The order books have been good for us. We have also, in terms of the visibility of business going into Q4 is quite strong. And we see a strong Q4. Whether we'll touch a growth of around 25% or 30% will depend on some of the conversions of deals at the last moment. We're still a license-based software company. A lot of our revenue depends on making deals in that quarter. So I think, but we are very hopeful that it's going to be a strong quarter.
Okay. All right. Mr. Jeet, if you could just touch upon what's taking place in key geographies such as the US, which was up around 12.6% year on year, but it's lower than what the company has been, clocking on an average. So if you could just take us through what took place there and when do you expect a recovery?
See, our traditional markets have been markets in India, Middle East, and that's where the company started, and we have moved lately to the markets which are more mature in management. Markets like India, Middle East have been very strong for us in terms of their growth markets, and right now the overall slowdown in markets, especially in IT services, you don't see that happening in markets like India and Middle East, which are driving our growth. In US, we have clocked a growth of roughly around 25% for 9 months period. And since our revenues are still very small, a single quarter does not give the right reflection of growth rates. We are hoping that over next few quarters, we should be able to further accelerate the US growth momentum. And the business we are pursuing out there is limited to banking and insurance, which is also in other geos. And we have started getting strong traction from slightly larger accounts out there. And we hope to build that. The US is always going to be a larger challenge. It's a more mature geo for us. And India product stories is still emerging in these markets. We have got roughly around 70 accounts in US, but a long way to go. But we are very hopeful that in our next 3-4 quarters, we can accelerate the growth rate out there.
All right, so that's about the US. Just wanted your thoughts on 2 things. One was APAC. While the first quarter revenue in APAC, FY23, Q1 FY23 revenues were close to 46 crores. Ever since, we've never gotten back to those levels. This quarter as well, you did just about 42 odd crores in APAC. So what's the prognosis for APAC? When does it cross that 50, 60 crore per quarter sort of run rate? And secondly is India. While APAC is not growing, both India as well as, US have seen growth. In India, what kind of growth can we see? It's about 30-35% of your revenue. Where does that settle?
Yeah, I think we have to look the data in the context. So what's happening? All our markets are growing substantially. And since Middle East and India are growing at a 30 or 38% respectively, so even an 18 or 25% growth looks, slightly lesser. But I think what I will always advise that we are still a smaller company, and a quarterly view of any number is not the right number. We hope that at an annual level, APAC will show a strong growth, about 20% for this year as well. In India, we are doing very well on the financial services side, and with what has happened, and especially in banking space for us, has been very good in terms of helping customers to really transform their lending systems, and that's happened, in markets as well as India and Middle East and APAC. So we see that this momentum to continue for at least next 1 year. Still, there are a lot of accounts which are looking after, and looking at buying our software. And I don't think there's any challenge to continue a growth momentum going into next 2 quarters.
Okay. The last time we spoke in around October, you had indicated that majority of your growth is being driven by large bank deals. Is that momentum continuing from October to now? And what are you guiding for?
Yes, you are absolutely right. I think if you look at our logo acquisition, we do depend a lot on new logo acquisition. We have got roughly around 38, 39 logos for 9 months. But the larger push in growth has come into average deal sizes. That has come out of getting large banking deals in both India and Middle East, and some in APAC. US numbers are not that large, but I think we've got substantial deal sizes. And I don't see any reason with our new launches in what we have done in trade or MSME lending or digital lending. I think the deal sizes will further further grow over next 1 year, and both in markets which are our strong markets and the emerging one, the newer markets, we do think that the deal sizes will keep on growing for us.
All right. I wonder why you don't then share the total contract value. You just share logo additions, and you're saying deal sizes are going to increase. But that question for another day, Mr. Jeet.
We do share total contract values because as part of disclosure now, the disclosure requirements are every time we get a new deal, all the disclosure values are shared.
Right.
So there's no problem in that.
Okay, just wanted your thoughts on two things. One is your EBITDA margins. I remember a year back, it was close to 17, 18%. Now it's 21%. So what is a sustainable run rate? The third quarter itself, you did margins closer to 24%. And the second one was on the annuity part of your business, which is close to about 59% of your revenue. You had targets of it reaching close to 75% of your revenue. So both on EBITDA margins and annuity, what's your prognosis?
Yeah, I think since the revenues are not streamlined across quarters, they're slightly lopsided. So margin position at the end of the year is the right way to look at. And our guidance was that we should be able to easily maintain roughly around 22 to 23% EBITDA and roughly around 18 to 19% net margins. I think we are on track to that. I don't see any challenge this year on that space. So we don't see as a margin, being an issue in that. I'm sorry, what was the other question for you?
Annuity.
Yeah, so see, the annuity position is part of the function of our business. As a software license business, there is an element of compounding which happens through subscription sale or annual technical support sale. So as the size of the company becomes larger, we should be able to grow. And what I've always said that once the company size reaches roughly around 300 to 400 million, our annuity part of the business should be around 70% of the overall revenue. It's a function of growth. So it does not happen in a short period of time. It happens as the company grows. So I think we are on the top. We are nearing roughly around 150 million. I think we have still some way to go to reach around 300 million to 400 million.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the word coming in from Newgen. We were talking about how Keval Kiran has rallied around 100 odd percent. Newgen has rallied over 200%, 295% from its 52-week close. So just look at the kind of gains that stock has seen. But